Hello traders, thank you for joining today's True Trading webinar. I'm excited to be here with you. Risk disclaimer, True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elite Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the federal funds rate USA. Second one is the RMPI month over month in Canada. Let's start with the first one. Now, what is federal funds rate in USA? The federal fund rate is the primary interest rate set by the Federal Reserve. It represents the rate at which US banks lend reserve balances to each other overnight and is this interest rate directly influences US dollar strength, bond yields, and global risk sentiment. As a result, it has a strong impact on the Euro USD currency pair. Generally speaking, a higher than expected rate decision or a more hawkish policy tone generally supports the US dollar and can push the Euro USD lower. A lower than expected rate or decision can push the Euro USD to the upside. Now, the event details. On June 17th, 6 p.m. UTC time, we got the financial news event. The federal fund rate, the previous number was 3.75%, forecast 3.75%, and the actual number we also got is 3.75%. The federal fund rate is the benchmark interest rate used in the US monetary policy, and it is a key tool used by the Federal Reserve to control inflation and manage economic growth. Now, let me show you the price chart. Now, look what happened once the news came out. Once the news came out, the price action of euro dollar actually started the decline. We got bearish price action overall in euro dollar currency pair. Now, let me discuss market context and pre-release expectations. Forex market expectations suggested the Federal Reserve would maintain the current rate at 3.75%, indicating a stable monetary policy stance. Currency traders were not only focused on the rate decision itself, but also on forward guidance, economic projections, and commentary from Federal Reserve officials. If the Fed signaled a more hawkish stance, concern about inflation, or readiness to tighten further, the US dollar could strengthen. If the tone shifted toward caution, the US dollar could weaken. Euro USD is particularly sensitive to interest rate expectations because of the large yield differential between the US and Eurozone. The market reaction that we got in euro dollar is the actual funds rate came in at 3.75%, matching both the previous reading and market forecast of 3.75%. Following the Forex news release, Euro USD moved lower as forward guidance and policy statement as more hawkish than anticipated. Despite the rate remaining unchanged, the Federal Reserve's tone on inflation, economic projections, and future policy over an extended period. This reinforced US dollar strength, created selling pressure on euro dollar currency pair. So, why the euro USD moved down? There are several important factors contributed to the bearish move in euro dollar currency pair. The interest rates held at 3.75% as expected, but forward guidance leaned hawkish. Federal Reserve signaled prolonged restrictive policy stance, upward revisions to inflation and growth projections. US Treasury yields moved higher following the statement. The US dollar strengthened across major currencies. Currency markets reduced expectations for near term rate cuts. The combination of these vital factors created bearish momentum in Euro USD immediately after the news announcement. The key market drivers observed: the federal funds rate actual 3.75% versus the forecast of 3.75%. That is in line. The forecast was 3.75 and we got the same 3.75% number. The hawkish forward guidance and policy statement is also one of the key market driver. Upbeat economic projections from the Federal Reserve, higher US Treasury yields, and broader US dollar strength across the forex market. It's not just the euro dollar that started the decline. Uh, in few minutes time, I will show you the rest of the other pairs also started the decline, such as the AUD USD, NZD USD, and GBP USD pairs. They also started to drop. Technical and sentiment considerations. The hawkish tone from the Federal Reserve generated bearish sentiment for Euro USD in the short term. A more restrictive policy outlook typically supports the US dollar because it maintains higher yields differential in favor of US dollar dominated assets. With the initial reaction favored Euro USD downside, currency traders continued to monitor Federal Reserve commentary, inflation data, and labor market conditions for confirmation of the longer term trend. The trading outlook, as far as we go, well, it's a bearish, it's a downtrend going on. The short term bias is down, it's going down away, it's bearish in euro dollar currency pair. The hawkish forward guidance from the Federal Reserve signals prolonged strength in the near term. If upcoming economic data remains resilient and inflation persists above targets, forex market may further solidify expectations for prolonged high interest rates, which could remain supportive for US dollar and bearish for the euro USD. However, forex traders should continue monitoring US economic upcoming data and the eurozone developments. Overall analysis is the Federal Reserve kept the federal funds rate unchanged at 3.75% in line with Forex market expectations. However, the accompanying forward guidance and economic projections leaned more hawkish than anticipated. The central bank signaled that interest rates are likely to remain elevated for an extended period, citing persistent inflation concerns and resilient economic growth. As a result, the US dollar strengthened and Euro USD moved lower following the release. The hawkish policy outlook reinforced expectations that the Federal Reserve is in no hurry to ease monetary policy, providing short term support for the US dollar and creating downside pressure on Euro USD currency pair. The final key takeaway is the is 3.75%, and the actual number we got is also 3.75%. So the federal funds rate remained unchanged as expected. However, the hawkish forward guidance and policy statement signaled that interest rates will stay elevated for longer, reinforcing US dollar strength. This pushed the Euro USD lower after the news release as currency markets priced in a more restrictive Federal Reserve policy outlook compared to earlier expectations. The next one is the RMPI month over month in Canada. On June 18th, 12:30 p.m. UTC time, we got this financial news announcement. But let me first discuss what is RMPI month over month in Canada. RMPI stands for Raw Materials Price Index. It measures the monthly change in prices paid by the Canadian manufacturers for key raw materials such as crude oil, metals, and agricultural inputs. So, RMPI is an important financial indicator of producer level inflation in Canada. This financial data is closely watched because it provides early signals of inflation trends before they appear in consumer price indexes. As a result, it can influence expectations for monetary policy decisions by the Bank of Canada and impact the Canadian dollar. A stronger than expected reading suggests rising input costs and higher inflation pressure, which can support the CAD dollar and push the USD CAD lower. A weaker than expected reading suggests easing cost pressures, which can weigh on CAD and support USD CAD to the upside. So, overall, what we can say is the RMPI measures changes in the prices that Canadian manufacturers pay for raw materials used in the production. These includes commodities such as energy products, metals, and agricultural goods. Because raw material costs directly affect production expenses, RMPI is considered a leading indicator of inflation at the producer level. Rising RMPI typically signals higher future consumer inflation, while declining RMPI suggests easing inflation pressure. Now, the previous number we got 2.6%, forecast was 1.1%, and the actual number we got last week is 0.7%. The currency pair to focus is the USD CAD currency pair. Now, let me talk about market context and pre release expectations. Currency markets were expecting a decline in RMPI from 2.6% to 1.1%, indicating a cooling in raw material price pressures compared to the previous period. Let me also show you the chart of USD CAD currency pair. Here's the price chart of USD CAD, and as discussed last week, I was expecting USD CAD to move up. This was the blue line. Market showed us a nice bullish breakout. So it's probably going to rise up even further. The expected slowdown in RMPI suggested weaker commodity driven inflation and potentially softer input cost demand within Canada's industrial sector. Forex traders were closely watching this release as it may provide early confirmation of whether inflationary pressures in Canada are continuing to ease or stabilizing at higher levels. A reading above 1.1% would have suggested stronger than expected inflation resilience, supporting the Canadian dollar. A deeper contraction would reinforce expectations of weakening inflation momentum. Now, once we got the actual news, the market reaction, what we got is actually a bullish price action overall in USD CAD currency pair. And even as of today, USD CAD is rising up. The actual RMPI reading came in at 0.7%, written in blue in red color, below both the previous reading of 2.6% and the 1.1 forecast level. So, following the Forex news release, USDCAD moved higher as traders interpreted the weaker than expected data as a sign that raw material price pressures are easing faster than anticipated. The softer reading reduced expectations that the Bank of Canada would need to maintain restrictive monetary policy, leading to broad Canadian dollar weakness and supporting USDCAD to the upside. Now, why USDCAD moved up? There are several factors contributed to the bullish move in USDCAD currency pair. Lower than expected RMPI, we were expecting 1.1%. That was the forecast, but the actual number we got is 0.7%. So this means reduced inflation concerns, easing raw material cost signal weaker producer level inflation. Currency markets reduced expectations for aggressive Bank of Canada policy tightening. The Canadian dollar weakened against major currencies. Oil prices and commodity sentiment provided limited support for Canadian dollar. The combination of weak domestic data and broader US dollar stability created selling pressure on CAD, and the combination of these factors created bullish momentum in USD CAD immediately after the Forex news announcement. So the key market drivers observed is the RMPI actual number 0.7% as compared to the 1.1% forecast. So that is weaker than expected. Easing raw material price pressures in Canada, reduced expectations for higher Canadian interest rates, weaker Canadian dollar sentiment across the Forex market, broader US dollar stability during the session, market repricing of future Bank of Canada policy. Now, let me discuss technical and sentiment considerations. The weaker than expected inflation data generated by the Forex price environment typically reduces support for the Canadian dollar because it lowers the likelihood of additional monetary tightening by the Bank of Canada. While the initial reaction favored USD CAD upside, currency traders continued to monitor oil prices, Bank of Canada commentary, and broader risk sentiment for confirmation of the long term trend. As far as the trading outlook is concerned, the trend is up in USD CAD currency pair. So it's a bullish bias. The short term bias is up. The weaker than expected RMPI reading supports the possibility of continued Canadian dollar weakness in the near term. If future inflation releases continue to show easing price pressures, Forex markets may continue monitoring upcoming Canadian economic data, oil prices movements, and Bank of Canada communication for additional direction. The final key takeaway is the Canada's RMPI came in below expectations, indicating forecast reading reduced support for the Canadian dollar and helped push USD CAD higher after the news release. Aggressive Bank of Canada policy outlook, creating a short-term bullish environment. Let us take a look at previous week global market trends. I'm going to take a look at euro dollar and USD Swiss franc currency pair. Here is the price chart of euro dollar currency pair. And you can see that we got this kind of a trend line break over here. And euro USD is trying to drop over here. If we go over to the daily time frame, this is where market tried to bounce, but last week I told you guys that market's probably going to drop more to hit the next support level. As of today, it's clearly sliced through it. So I expect further weakness in price action of euro dollar currency pair. That's the way how I see market is probably going to drop more. in euro dollar currency pair. Okay. Next one is the US dollar Swiss franc. USD Swiss franc. The overall trend is down, but market is trying to create some kind of a short-term pullback over here. In the daily time frame, it's a nice uptrend going on, and I expect further upside. Even in 4-hour time frame, this is what I've mentioned last week, that if US Swiss franc really wants to drop, then it should break below the support level, which it didn't. It only managed to fall down over here a little bit and then continued the rise. So it's kind of an uptrend going on inside US dollar Swiss franc currency pair. If USD Swiss franc is going up, this means United States dollar is becoming strong. And if euro dollar is falling down, then it means euro is becoming weak and United States dollar is becoming strong. Let's go back to the PowerPoint presentation. Now, let me talk about current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. Okay, so these are the basically current week, or I would say upcoming important Forex news events. The first one is the new home sales in USA. The currency pair we're going to focus is the euro dollar currency pair. Date and time is June 24, 2 p.m. UTC time. Next one is the unemployment rate in Australia. Date and time is June 25, 1:30 a.m. UTC time, and we're going to focus on AUD USD currency pair. So let's get started. The first one is the new home sales. Now, what is new home sales? Let's discuss that. The new home sales measures the number of newly constructed homes sold in the United States of America during the previous month. It is a leading indicator of economic activity and consumer confidence, directly influencing the US dollar. A higher than expected figure signals a strong economy, which can strengthen the dollar and push Euro USD lower. A lower reading suggests underlying weakness, potentially weakening the dollar and supporting euro dollar higher. Forex traders also monitor housing supply and median prices for valuable additional context. The new home sales tracks the annualized number of newly constructed homes sold in the USA during the previous month. It is released monthly by the US Census Bureau and is considered a timely indicator of housing market health because home purchases stimulate a wide range of economic activity, including construction jobs, future mortgage lending. New home sales is viewed as a leading indicator of broader economic momentum. The data is often more volatile than existing home sales due to its smaller sample size, but it provides an early read on consumer demand and confidence in the economy. Now, let me discuss some of the numbers. The previous number was 622K. K means triple zero. And the forecast is 638K. Actual data not yet released, but it is going to be released now. Let me discuss market context and pre-release expectations. Currency markets are expecting new home sales to rise from 622K to 638K, indicating improving demand in the United States of America housing sector and continued resilience in the broader economy. This expected increase suggests that lower mortgage rates and steady consumer confidence may be supporting home buyer activity despite ongoing affordability concerns. Forex traders are closely watching this news release because housing data provides important clues about consumer spending, employment trends, and overall economic health. Reading above 638K would signal stronger than expected economic momentum, which could support the US dollar and pressure Euro USD lower. A weaker reading below expectations could raise concerns about economic softness and potentially weaken the US dollar, supporting Euro USD upside. Now, why Euro USD could move after this Forex news release? Well, there are key drivers for potential price action, and that includes actual new home sales result versus forecast and previous number, US economic growth and consumer confidence signals, US Treasury yield reaction to the financial data, Federal Reserve interest rate expectations, US dollar strength or weakness, broader risk sentiment, and Eurozone economic conditions. Because housing data reflects consumer demand and economic vitality, it can influence expectations for future monetary policy and overall dollar direction. Now, let me discuss technical and sentiment considerations. Euro USD may experience increased volatility around the news release time due to the data's implications for United States of America economic strength. A stronger than expected reading would likely support the US dollar strength and push Euro USD lower. A weaker reading would likely weigh on US dollar and supports Euro USD to the upside. However, follow through movement will also depend on broader factors such as Federal Reserve commentary, inflation data, and Eurozone economic developments. Currency traders should also monitor median home prices and housing supply data included in the report, as these provide additional context on housing market conditions and affordability pressures. The trading outlook pre release. Short term bias is neutral to slightly bearish. Um, in euro dollar currency pairs. So I would say it's slightly bullish as far as the United States dollar is concerned. Downside risk for euro USD is there if new home sales comes in stronger than expected, meaning we get a number that is above than 638K, signaling US economic resilience and supporting the US dollar. Upside potential for euro USD is there if new home sales show a weaker reading than expected, raising concerns about economic softness and weighing on the dollar. Forex traders should expect elevated volatility around the financial news release as markets adjust expectations for US economic momentum and Federal Reserve policy. The final key takeaway is Euro USD traders will closely monitor the new home sales release for signals about US economic momentum and consumer demand. A stronger than expected result, let's say above 638K, would support the US dollar and push Euro USD to the downside. Well, it's already going down, by the way. So we might get even further drop in price action of Euro dollar currency pair. And let's say if we get a weaker reading, um, that say even goes below than 638K, that may raise concerns about economic softness and support, and Euro USD is probably going to rise up. This news release is scheduled for June 24 at 2 p.m. UTC time. So we will see how the market is going to react at that time. Next one is the unemployment rate in Australia, and we're going to focus on AUD USD currency pair. Date and time is June 25th, 1:30 a.m. UTC time. The unemployment rate measures the percentage of the labor force that is unemployed and actively seeking work. It is a key indicator of Australia's economic health and a major driver of the Australian dollar. A lower than expected rate of strong labor market reading typically supports the Australian dollar and can push AUD USD higher. A higher than expected rate of weakening jobs market may weigh on the AUD and push AUD USD forex pair to the downside. Currency traders also watch participation rate, employment change, and wage data for clues about labor market tightness and future Reserve Bank of Australia policy. So the unemployment rate is the percentage of the total labor force that is jobless but actively seeking employment and available to work. It is released monthly by the Australian Bureau of Statistics (ABS) and is one of the most closely watched indicators of labor market health. The unemployment rate provides critical insight into the balance between labor supply and demand in the Australian economy. Falling unemployment typically signals economic strength, rising consumer spending, and potential wage pressure, while rising unemployment suggests economic weakness and reduced consumer confidence. So, this Forex news data is particularly important for the Reserve Bank of Australia as it directly influences monetary policy decisions, especially regarding interest rate adjustments. Now, let me discuss the numbers. The previous reading was 4.5%, the unemployment rate. Forecast is 4.4%. The actual data not yet released, but it is going to be released on June 25 at 1:30 a.m. UTC time. Now, a reading below 4.4% would signal stronger than expected labor market tightness, potentially increasing the likelihood of tighter Reserve Bank of Australia policy and supporting the Australian dollar. A weaker reading above expectations could raise concerns about economic softening and weigh on the Australian dollar. Why AUD USD could move? There are key drivers for potential price action that includes actual unemployment rate result versus forecast and previous numbers, employment change and participation rate data, wage growth and labor market tightness signals, Reserve Bank of Australia interest rate expectations, Australian dollar strength or weakness, commodity prices, particularly iron ore and coal, broader risk sentiment, and US dollar dynamics, China economic data and its impact on Australian trade. Because the unemployment rate reflects labor market conditions, it can influence expectations for future Reserve Bank of Australia monetary policy and overall Australian dollar direction. The technical and sentiment considerations. AUD USD may experience increased volatility around the release due to the data's importance for Reserve Bank of Australia policy expectations. Let me show you the price chart of AUD USD currency pair. Here is the daily time frame of AUD USD currency pair. So a stronger than expected reading, meaning we get a lower unemployment, would likely support the AUD strength and push the AUD USD higher. Well, as of today, it's going down. Uh, Forex traders should also monitor the participation rate and employment change figures alongside the unemployment rate, as these provide additional context on labor market dynamics and workforce engagement. The short term bias is slightly bearish in AUD USD currency pair. Upside risk for AUD USD is there if unemployment rate comes in below forecast under 4.4%, signaling a stronger labor market and supporting the Australian dollar. Downside risk is also there in AUD USD currency pair, assuming unemployment rate shows a weaker reading above 4.4%, raising concerns about economic softening and weighing on the Australian dollar. Currency traders should expect elevated volatility around the Forex news release time as currency markets adjust expectations for Australian economic momentum and Reserve Bank of Australia policy. The overall analysis is the Australia's unemployment rate is expected to improve slightly from 4.5% to 4.4%, indicating continued strength in the labor market dynamics. Final key takeaway is the previous reading was 4.5%, forecast is 4.4%, actual data not yet released. AUD USD traders will closely monitor the unemployment rate release for signals about Australian labour market health and Reserve Bank of Australia policy expectations. A stronger than expected result below 4.4% could support the Australian dollar and push AUD USD higher, while a weaker reading above 4.4% may raise concerns about economic softening and weigh on the Australian dollar. The release is scheduled for June 25th at 1:30 a.m. UTC time. Now, let us take a look at current week Forex market trends. The first one is the Euro USD, second one is the AUD USD currency pair. So here's a price chart of euro dollar currency pair. This is the weekly time frame. Market try to drop over here, and this is where we see some support, and it's possible that price action is going to show some kind of a hesitation over here. It might not clearly slice it down. It might take maybe a week or two if euro USD really wants to go down further. Okay. So this is kind of an important support. Market previously bounced from that level but failed to print a new high. So now we got a new low in market. The daily time frame shows kind of a bearish decline over here in euro USD currency pair. In 4 hour time frame, it's a downtrend going on, and we never got this breakout. So overall, it is still a downtrend. Now, market could bounce back up if we get a bullish breakout above this old swing high. Otherwise, it's a downtrend going on inside euro USD currency pair. Next one is the AUD USD currency pair. Here's the weekly time frame. Price action is hitting this previous swing low. It's actually a bit away, but it's actually testing this trend line. In daily time frame, this is where we got the break to the downside, then a retest over here, and then further drop in the market. We have the strong support over here. So if market manages to break through the support level in daily time frame of AUD USD currency pair, then obviously the uptrend is going to turn into a downtrend. But for the time being, this could turn into some kind of a pullback over here. Next, USD CAD. USD CAD currency pair. This is the weekly time frame, and we got this nice bullish breakout. This was kind of a test of the resistance, then a drop in market, and then market rallied back up again. Now it's even higher than the old swing high as well. So the forecast is bullish in USD CAD currency pair. The next resistance area that we have is right up here, which market might try to test it. So in daily, the trend is up in USD CAD currency pair. Next one is the spot gold. Spot gold is falling down. In last few weeks, we got a test of this trend line, and the way market is falling down, we might get a bounce from these lows, just a short-term bullish pullback, and then a continuation of the downtrend in XAUUSD pair. I will take a few minutes now for questions and comments, and if you have any questions or comments related to today's Forex trading webinar, please feel free to type inside the chat box. I will be happy to answer your questions. Okay, here's a question. How do they determine the currency value? For example, why euro is expensive compared to euro USD? Well, euro is not expensive as compared to the United States dollar. It's actually becoming cheap. The United States dollar is the one that is becoming expensive because the price action of euro USD is falling down. If the price action of euro USD is rising up, then it means euro is becoming expensive. The value is appreciated. I mean, the value of euro. As far as the determination of the currency value, there are several key factors. For example, we can look at the Interest rates, this is often the most important factor in the short term. Currencies from countries with higher interest rate tend to attract more investors seeking better returns on their bonds and other fixed income assets. We can also look at the unemployment rate numbers, the inflation in the country, the capital flows like the movement of money across borders for investment purposes, and economic performance, and the outlook, the overall health of a country's economy and market sentiment play a vital role. The US dollar is often seen as a safe haven currency during times of global uncertainty or geopolitical tensions. Okay. The next question, will the Euro USD bounce from this support area or continue? Well, the way I see Euro USD is most likely going to drop more. We might have a chance to see a bounce over here, and here's a 4 hour time frame, and if market is going to break above this resistance area, then we might get a bullish leg. Otherwise, it's a downtrend in euro dollar currency pair. Now if we take a look at the pound dollar, the GBP USD, you see it's not just the euro. The GBP USD, you see we got this trend line break. So yesterday market rallied up. Now we got a retest of this broken trend line. So it's quite possible that GBP USD is also going to drop over here. If you check out the Australian dollar, it's also falling down. So we got the same story in pound dollar currency pair. So let us review what we have learned today. Well, we discussed about the new home sales in USA and unemployment rate in Australia, Euro USD, AUD USD, USD CAD, and spot gold. These are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, June 30th, 2026, 12 p.m. UTC at the same time. That's all from my side for now. Have a great day and goodbye.